And welcome out to the Halftime Report. This is December 20th, 2019. Christmas is almost here. We're 5 days away. I hope everyone's excited. I know I am. Here on a Friday, got myself, Coach Cody. We got Coach Noah. We got a guest here. Frank was not able to make it. We're sorry, guys. I know everyone's looking for Frank the Tank on Friday Frank Day. But we got David as our guest today. And we have Gino on his way. So we're going to have a full crew today, guys. We're going to have fun here on Friday. Got some mailbag questions going on. And Noah, what's some of the main headlines I'm seeing?
Well, you said it's the 20th, right?
Yes, I did.
Well, this is about when I need to start my Christmas shopping.
Oh,
so that's my main headline news today. But no, what I've seen today, again, markets continuing to fade up. We're seeing the melt up. Boeing's been in the news. Other than that, I think there was some Brexit news and, pretty light news day. Again, my primary concern is starting my Christmas shopping early this year and getting it done before Christmas Eve.
All righty. Well, James, that always makes me laugh. It isn't No Justice Day. I didn't realize. Hashtag No Justice. I did actually get a little scolding after that the first time. But it's funny that it still continues on. That's why I can't play that disclaimer though. I had the Valkyries on there. I thought I was clever. I really did. But well, other than most of the headlines I'm seeing is just new market highs. Nothing. I don't see anything slowing this market down. I keep expecting some kind of pullback or consolidation. And yesterday I thought we might be able to get it, but I'm not seeing it at all. It just keeps running. And with the latest headline that Trump and Xi Jinping are now actually setting a date to make a formal signing, is that why the market's running, or is that just recycled news? Is that baked in? Is this like
I'm gonna full on attribute this to Santa Claus rally.
You're giving Santa credit. All right.
Santa gets credit because, Santa Claus rally, it's a thing that people talk about in the stock market in anticipation that the market's going to rise that last little part of the year. This has been really the last full trading week of the year. Next week you got the holiday and then, the New Year's is coming. And between that, you got, markets closed. Volume gets really, really light between the holidays. And, you'll occasionally see a little push like the very last trading day of the year. But, this week's been pretty solid again, from a breakout continuing to rise. That index is impressive. The only thing I really see on it, Cody, that makes me pause for a moment is the volume dropping a little bit as it's poking itself out to new highs. 32.28. We probably take the over under on what it's going to hit first. Is it going to hit 3,300? Is it going to come back down to 3,100? That would be the probably the bet of the week.
If I was a gambling man, which I'm not, I would actually say, based on what you just said with that volume, I would take the under.
Take the under?
I think I'd take the under just because, it is range up. There's no doubt about it being range up. The volume's starting to fade out, showing that, I think everybody else is seeing it range up as well.
Well, will people continue to buy? That's the question. Because, it's got good momentum. The momentum's still good, even though the volume's tapering. And today's volume's obviously partial because we're only halfway through the session. But, it's pretty, I think, it stalled out there at 3,100 and it's got a couple new, a little bit of new life, a little spring in its step there, last two candles popping up. So I think the momentum's solid. I could see it hitting 3,300. It's closer target than dropping all the way back down to, you might see it drop to like 3,150 old resistance in the rising moving averages if you do get a pullback. But
if it drops to 3,150, there will be tons of
buy the dippers.
Oh my God. Yeah. And just good setups that with easy triggers as well. This is one of those times that personally I look to just wait or, cash flow, maybe spread some positions out, take a little profit. That's what I spent my morning doing. I didn't take any new trades today. I actually just closed trades today. And is that what you're looking to do? How do you approach a Friday market high? Right. As you said,
locking your gains. This is where if I own stock, I might consider selling covered calls on the positions, closing out profits on some of the options trades, reducing position sizes, never a bad idea. Scaling out of positions, always something you can do, lock in partial gains and leave some room to run. But, again, it's just continuing to defy gravity. And some of the candidates I've had in my watch list and in my account have, kind of petered out. Like they've stalled out a little bit here in the last couple of days, where even though the market's making new highs, some of my own, candidates haven't moved as much. So, we've had some pretty awesome, stellar candidates off of the scouting reports this week that performed extremely well. Some of them popped up and then, given back gains since on the bull list. Not a lot of action on the bear list. I haven't seen a lot of
No, I don't think I
any
saw a
major
single
performance out of the bears that have really done anything that have impressed me. So, we're running with the bulls at this point in time. And again, that S&P, just continues to defy gravity. And I don't really see a whole lot difference when we look at some of the other indexes like the NASDAQ. Also, again, continuing to, fly high, volumes tapering in a very similar fashion. As you can see that same exact kind of, taper off in the volume as it rises. So that's the participation. That's, people are still buying, but the level of participation is decreasing. And that can be a sign of waning interest in the run. But that doesn't mean it has to turn around. I mean, it can continue to move.
No.
Price can still move on low volume if you don't have a lot of sellers. Doesn't take a whole lot of new buyers to keep pushing the price higher.
Absolutely not. I mean, you can look at some of the metals markets and like palladium. We thought it was going to pull back, and it just kept running all year long.
Yeah.
And that's a great example. Is the market can do the same as well. Is that it actually does not have to give us the pullback that we expect. We may expect it. We may be disappointed. But between the different sectors, I don't really see much difference between the S&P, the Dow, or the NASDAQ. But the Russell to me has been the biggest mover in this movement. It didn't want to play ball. It was kind of stuck in a range for the entire year. We had a fake breakout back in June, I think it was. And then finally it decided to really it broke. We got the breakout retracement, perfect secondary opportunity there if you missed the primary opportunity. And since then it's just been running, and I don't see much slowing the Russell down, because I think the Russell's now playing catch up to the rest of the market.
Well, I'll tell you what, I did, not put the top side on the Condor strategy this last month.
I actually did the same.
I left the top. I just did the bull put side because I had a sneaking suspicion it was going to break out, and I didn't expect it to run as hard as it did. But I thought that bullish bias was going to really carry through on that, and it really just came down to the context and the setup of it, taking out that high and poking up and testing that. So when I threw the Condor on, I just put the put side on, and again, I was waiting for a sell signal to throw the top side on, and never really got one. So got a lot of random drawings on that though.
I think it's every time you're expecting it to pop. And actually it looks like it was back in May that we got that false breakout. Looking back on your chart here. God, that one smacked me in the face, and it actually upset me with the rut. There aren't many times that I'll take the actual index itself on a breakout, but I did take the rut on that breakout back in May, and it told me no very quickly, and 1 day in, 2 days out. Yeah, right.
Oh yeah, right there. Boom. Yep. Yeah. That's one. And I was thinking if that happened, I would throw the top side of the Condor on. And so, that initial break was prior to the previous expiration. So when it pulled back and started heading back up again, I was like, oh yeah, that's got a good chance of running after it cleared that 1,600, high. Big fat number ballpark for it. And so, the fact that it shot up, it's got this big, beautiful rising wedge pattern, which is one of those where, when you see the tops rising here and then the bottoms are rising, at a slightly steeper rate, it pinches into a wedge, and those oftentimes will drop back. That rising wedge pattern is another way of stating slowing momentum. You can just kind of see, yes, it is continuing to grind, but it's that melting up type of thing where it just kind of, comes to a head, and then eventually it just drops back under its own weight and profit taking. So, right, rising wedge pattern. That's a fun one you don't really talk about.
Rising wedges are actually interesting. I personally they're not my favorite pattern. If I see a rising wedge, I'm like, I missed it. I keep moving on. But I can see people when they see that pattern wanting to get into it. It's not my cup of tea.
Yeah, no, I'm looking at it as a sign of, like, a little bit overheated. Same kind of thing where, like, you look at some of your indicators, like an RSI, for example. I've got mine set to the default Wilder method, and it's overextended. It's saying, hey, you're in that overbought territory. It doesn't mean it can't keep going up. Just, we know the idea of range up, and that's had a really, really good run. And so what I think happens with these types of setups is, people will trail stop losses. And then once it finds a pool of liquidity out there where more selling inventory comes in, it'll start to come back and hit the stop losses. And so typically after a strong run up, you'll see a steep drop. Like it takes a couple, 2 candles, 3 candles down, but it's a quick drop. That's the old, bulls take the stairs, bears take the elevator type sentiment. But it's continuing to grind. And, when you don't get a lot of activity over the holidays, the market may stagnate. You might see small body candles, dojis, spinning tops. You might even see some profit taking, but volume gets really, really quiet between Christmas and New Year's, just because most people's attention's diverted elsewhere. So, as people, focus on other things in life, the market volume tends to get pretty quiet. So that's my general expectation. And then, who did I see in there? Last year Christmas wasn't so hot. Who said that? Steven.
No,
Christmas
it wasn't.
was a little ugly.
Santa crashed last year.
Well, this is what I'm going to say. It's because you were naughty, Steven. It's because you were on the naughty list. It's all your fault that the market did not perform so well. So.
Oh yeah, last year was a lot of fun, and actually, some of the people that were a little bit more daring when that bottom did start. If you got in last year at the bottom of December, you were a little bit happier. Come this December, this year treated you quite well if you caught the bottom last year. David, I'm going to bring you in here. You're being a little quiet there in the background. We don't like that. We are talkative folks here.
I got you.
How is your morning going? What are you seeing in the market today? What are your thoughts right now on everything that Noah and I were just running through on the market?
I was reflecting on what Noah was saying there. I'm trying to find in my chart, when was the last time you saw 5 green candles on the rut?
Oh, that's a good question. I mean, don't think
it seems exceptional. I see a couple of big candle moves, but I don't see like 5 in a row. But new market highs everywhere.
Yeah,
granted, we had some big political news this week, but market unfazed.
No, they don't even care. And actually, we're not going to get too much on that, but I will say I think it's funny the attorneys coming out there like, Nancy, if you don't send it to the Senate, he wasn't impeached.
Yeah, you got to turn in your homework.
I thought that was that's just funny. Anyways,
I did see the Trump rally where he said it doesn't feel like we got impeached, which for whatever reason, the first thing that came to my mind was David Lee Roth from Van Halen's 1984 album. I don't feel tardy. It doesn't feel like we got impeached. Yeah, that was pretty good rhetorical device use right there to kind of switching the focus of that and rallying the base. That's kind of an interesting scenario. But
and then with the trade deal actually being signed, that's already kind of dominated the trading news world. Is that we have the potential signing date of between Trump and Xi Jinping of China. That's actually looking to be scheduled in January. So it's like they actually set that date. Now, we don't actually still know what's in the deal. They haven't really told us any of the details. But I think this is my hypothesis, is that they've come to the agreement that they're going to come to an agreement.
We've agreed that we will come to an agreement. Yes.
Yes, is that they both realize that, hey, if we can get this phase 1 done within this next month or so, it's going to benefit us both. Let's just go ahead and do that. So that's just my hypothesis. For all we know, can get kicked down the can, kick the can down the road again. But
you know what that letter sounds kind of like? It sounds like you're back in school, in middle school, where you received a note from someone. It's like, do you like me? Yes, no, maybe.
Maybe. Yeah, that gives them a soft out.
Oh, kids these days will never understand the joy of passing notes in class and waiting till the teacher turns around to hand it to the next person. And it's like, and you didn't even have to say anything to get your note from one side of the class to the other. Like the entire classroom just became a working organ of just like, tap this person, they tap that person, hand it. It's like, they don't have notes in the letter. They just, hey, who's it going to? This way? All right. Note starts making its way across the classroom.
Exactly.
Always best when the teacher intercepted it and read it out loud.
Oh yeah,
that always ended well.
Yeah, that was always fun.
Well, again, so I think as across the board, all the indices are pressing higher. Dollar index, I thought was pretty interesting today. Coming down off of breaking down, violating the moving averages, seeing it break that big key support zone in there. and then putting in a pretty strong rally back up right into that moving average zone. So hitting that, big 200 day, period daily moving average, that puts it right in line with like the general trend zone. Where
It's back to neutral for me. I was saying yesterday that it, was looking more bearish because it had that kiss goodbye type pattern off the breakdown red candle. And I said, in order for me to go neutral, it has to come back in these moving averages. In order for me to go bearish, it has to get past these moving averages. I'm neutral on the dollar. I don't know how you can not be neutral when you have the weekly long-term trend still pointing up, the daily trend pointing down, and it's closing on a Friday between the 200, the 50, the 100, and the 20.
Well, yeah, I mean, look at it on the weekly chart here. On the weekly chart, you got a pretty neutral posture. You're kind of smack dab in between recent resistance highs and support lows. The overall movement, I think you could still say, hey, here's that upward trend. And it did, violate that to the downside. It tested it back down, but it's pushing back up inside that. So you can call that a test at this point in time and not necessarily a violation. Same with this big fat support resistance zone here in the middle. It came down and it tested it, but thus far it's kind of held that ground. So that it does have that kind of sideways feeling. You do have the lower highs on the right, but you're still, I think you would have to
then
take
you also have higher lows. So
so it puts you into a pretty good neutral posture on that. If it can stay and maintain that close up above the 200 period moving average, I think that bodes well for it. But I wouldn't be surprised to see that kind of, get that, another drop in there with that 200 period moving average. Kind of depends on where it closes the session in there and what kind of sentiment you see moving forward. But, you can see it continue to press high up to the top of the trend range there, or I think another drop back down in probably the 97 ballpark with that support zone in there.
Either or of those can happen. Although today's big candle, this is actually, as a day trader in the Forex market, this is the type of move that you really like because it's really easy to play. So go to the euro dollar crossbear for me. And then, go down a little intraday time frame. It was a very clear, easy trigger that when that line broke, exactly, sell, got the short retracement. You can add to it if you need to and play it to the downside. It was a very easy day trade. And for all the students out there that have taken the Forex 101 course, you can understand that a simple, mini or micro lot on that is an easy $30. Just you picked it up within the first 3 or 4 hours.
Oh, with the little trailing stop on that, it's not a hard trade. That's one of the beauties of currency trading is that you can narrow your focus. You have 6 major pairs you focus on. And out of those, you'll probably have your 2 favorites. And then you just kind of look for the context, the setup, and make sure you're in the, kind of the general right trend of it and take it down to that smaller time frame. What's your favorite time frame? I'm typically looking for setups on 30-minute charts, hourly charts, and then trying to trigger in on like a 5 to 15-minute time frame.
Actually, that's pretty close to what I look at. I look at hourly charts are the main ones I look for the overall trend to find those hard actual like entry points or trend lines and things. And then I'll go down to the 15-minute chart for my actual triggers. Very rarely will I actually be on the minute chart unless I'm actually looking to take profit. When my 15 minutes moved enough and I'm like, I'm starting to get that antsy feeling of like I'm doing really well right now, that's when I'll move to the dollar and start trailing that stop and let it just take me out. Because right when you start getting that feeling of fear and greed mixing, that's when I'm like, all right, it's time to exit this trade. I'm good.
There you go.
And that's kind of the way I do it. Cause I mean, we all know that feeling when you start getting that, like, I'm up, but could it go up more? But when it comes back down, and it's like, when I get there, it's like, just done, exit, call it a day. It's hard to do.
Ring the bell, take the money and run. Yeah.
Discipline.
It's hard to do. Yeah. But, of course, I trade with MT4 using a Wanda and adding a trail stop on that's as simple as a right click and then a left click down to it. And then you just let the trailing stop run and stop looking at it. Just give yourself some stress-free relief.
I find the more often I can remove myself from the equation, the better my trading does.
Yes.
So if I can automate the trail stop, or have a predetermined target in place, and then I don't sit in front of my computer and mess around with it, things actually turn out.
I got better things to do. I got a fantasy football lineup I got to make sure I set. I got other things to, and actually,
I've got Christmas shopping to start.
Speaking of fantasy football, Linda, I saw you in the chat. Linda decided to join our tackle trading fantasy league, and she's in the final 2, taking on Mark in the playoffs, for just to show that apparently we're not that great at fantasy football here, tackle trading. And she's projected to beat Mark by 50% of his score.
Well, I'm rooting. So, I'm rooting against Mark.
Yeah. So
that sounds
Linda, I'm rooting for you. You got to take Mark on and show us here at Tackle Trading how we should be playing fantasy football.
Nice. Well, I want to switch gears here and take a look.
Yeah. Sorry about that.
No, that's all good.
Side rant.
I love that, but let's take a look at gold and precious metals there, and pretty neutral. I think still on gold. Not a lot of activity here. Pretty quiet there in the middle. Kind of back up above the moving averages in the consolidation zone. So I put myself on a pretty neutral footing for gold. Silver's about the same. And I think one of the more interesting plays that I've seen as of late is that oil breaking up into the $60 zone. And, this is one that we've been talking about a lot lately. That $55 ballpark is where a lot of the energy companies need the price of oil to be above to really be profitable. So when you get the price of oil down below $55 a barrel, then, the fracking operations and some of the oil drilling outfits and stuff, their businesses just really slow down. And if it gets under $50 a barrel, they'll actually start shutting down the pumps. And, because it doesn't make sense to produce at that if they can only sell it for $50 a barrel or less. So when it broke out to 60, kind of a fun thing to watch was the energy sector following suit. And you got, a little lively action out of the energy sector. And
I like the setup on the energy sector right now.
Yeah, I think it's an interesting kind of reversal. And again, normally this time of year, it's pretty quiet. But the one thing I always look for is kind of one of my seasonal playbooks. And this is worth writing down, everybody out there in YouTube land.
Oh, is this a Noah Nugget coming?
This is a Noah Nugget. Ready? Energy stocks, oil stocks in the spring, starting around February. They tend to run strong through May. It's a seasonal expectation. Production ramps up. Peak consumption in oil happens in June. But those energy stocks have a history of performing really, really well from about February through May. So watch. And if you can catch stuff like where you see where it's got a bottom and it's got maybe, a reversal pattern setting itself up there, you can go find some of the stocks that are undervalued. You can kind of take that same concept we talked about yesterday with the dogs of the Dow, find the fundamentally strong undervalued, candidates that have been beat down by the market pressure, and see if you can find a pattern and a setup and a trigger that puts you in a posture to take advantage of a potential run.
Well, while you're on that, I'm going to go ahead and just throw a mailbag question out because you're kind of getting into it already. So today on a Friday, we typically do mailbag questions. As we've said before, guys, send them in, put them in the clubhouse. It's where I look to find them for our mailbag day. And one of the questions we did have was during these, let's see, from Larry. Hi, coaches. During these times of highs in the market, I wonder if there are any bargains out there to start long-term investing positions. And the dogs, the Dow we talked about yesterday. I think that's one of the better answers to have. So Noah.
Well, weren't we talking about Cisco as a good example of that? A pretty solid performing company over the years. Price has been beaten down a little bit. It's been in a downtrend while the rest of the market's been in an uptrend. And, you got it down at a $47 ballpark with a 35-cent dividend. You could find similar candidates in the energy sector's got a little bit more cyclical movement to it. But, if you take a look at some of the energy stocks out there like ExxonMobil, well, that's been beat down, but it's still ExxonMobil, $70 stock paying a 87-cent dividend. That's over 4% a year in dividend.
I'm always happy to grab some ExxonMobil.
Yeah. So, take a look at that. And again, it's got a consolidation pattern, and sure, it can go lower, but, it's one of those things where, the price gets depressed in the near term. And if you actually start to see the price of oil stay up above $60 a barrel, well, their profit margins increase. And there's kind of an interesting thing with oil. This is kind of one of those economic 101 concepts where peak profits occur when supply and demand are best balanced. If you get too much supply, then you end up discounting the product and profit margins drop. If you get too much demand and not enough supply, you get prices going too high, price gouging type stuff, activity kind of occurs, and then consumption drops because prices get too high. So you have to have to get your peak performance, you have to have a good balance between supply and demand. And again, the price has to be at a place where people don't cut back their consumption. And then you'll see, peak profits soaring. And so we're at, a point where what I'm paying at the pumps, not outrageously high where I live. And it depends on where you live and what kind of taxes they're levying on that. But, you'll see an uptick in consumption. And then, seasonal expectation for the sector is that it does tend to perform well early in the year. I mean, just look at last year as an example. It ran from January up through April, and it topped out at the end of April. That's ExxonMobil. So one of those things, again, for short term or, value build, you look for stocks like that in that sector that, or at another sector of your liking that have a good, good fundamental backing behind it. And again, a strong dividend. And, switching gears to one that's been,
real quick while you're still on there is that you really do have to make sure that you're maintaining your mindset. If you're looking for something as an investment, long-term, 5 years, 10 years, you really do have to suppress that trading mindset.
Well, yeah, for sure. That would be the
ExxonMobil here. We know it's down in range. No one expects Exxon to go out of business in the next 10 years. As Noah just explained, that dividend is fantastic. We can expect a little bit of run come the spring. There are a lot of reasons to look to pick it up down here at these levels. And picking up down here at these levels, if you're looking for 10 years out, you can pick it up now. Like, you don't necessarily have to look for that absolutely perfect trigger, because it's like you're down here at the low. You just want that slight reversal signal, then you pick it up.
It's the kind of candidate you could do boomerang type scenarios on, where you can sell the puts to acquire the stock. If you own the stock, you can collect the dividend, you can write your covered calls, you can rinse and repeat. And it's, it's one of those valuations. So again, getting a good idea of fundamentals, and it kind of comes back to that Warren Buffett mindset. Don't own a stock for 5 minutes that you wouldn't own for 5 years. When you're looking for that value investing, the dogs of the Dow mentality. Also, it's got to be one of those things where it's a company like an ExxonMobil that's really stable or sturdy, that, is not going to go out of business. You don't do this on the companies that have like single products that are, kind of getting beat down, or don't have a foothold in different areas of the economy, or a variety of products that they produce and sell that can keep them afloat regardless of what happens with the economy. One that I've had my eye on that's not related to energy at all that we were talking about is Kraft Heinz. Kraft Heinz, they sell ketchup and mac and cheese, things that are never going out of style, right?
Delicious.
I'm pretty sure here in the next year, I'm gonna buy plenty of, maybe not the next year, the next 3 years, 10 years of my life, I'm going to be buying more mac and cheese.
Yeah. Well, they've been beaten down, and they had some accounting irregularities, and they had a nasty stock gap, but their stock price is stabilized, and you got a $32 stock that's paying a 40-cent dividend.
Yeah,
so
it's discount
that's
I'm
over.
gonna ask a rhetorical question. No, why is that good?
Why is that good? Because that's over 1% a quarter in returns. And if you want to look at something to hold that can compound your interest and gains, having that dividend is a nice little cushion for you. If you're getting, that means you're getting over almost 5% a year just on the dividend alone. Well, considering market averages are 8% a year over the last 100 years, you throw on covered calls into that situation, and now you're going to be easily compounding gains and beating market averages. Plus, if it's a value investing type stock, I don't think for a minute that they will go out of business. They might get acquired by some other conglomerate, but I don't see them going out of business anytime soon, because again, they sell consumer staples, and the type of stuff that people are going to buy regardless of what happens to the economy. So it's an interesting candidate. Again, kind of a value investing build, and they're not perfect on the books. They do have some issues in their fundamentals that have been getting ironed out, but the price is stabilized.
What's the signal you're looking for?
Well, the fact that it's just flat sideways now, the fact that it's been hanging out in this price zone for the last, really since February.
Yeah, when you zoomed out, you could see it kind of like level off and then
Yeah,
taper
down,
back up a
boom,
little
and it's
bit.
just kind of hanging around this $32 level. So I don't necessarily need a price signal for a technical. We don't want to confuse swing trading with like boomerang trading. Swing trading, you'll be like, oh yeah, wait for the breakout. For boomerang trading, I'll be like, well, okay, I can just, if I really want to own it, just go sell a $32 put and have them pay me 90 cents to own it. Which right out of the gates there, that's a 2+% discount just for, selling an at the money put to acquire the stock. And then once you own it, again, you can go to work selling the out of the money covered calls and start collecting 1%, on a monthly basis on cash flow. And if you get called out, oh well, go back to selling puts. And it's again,
So you're telling me that I could buy a stock, use a covered call strategy, pick up a 4% dividend, 1% a quarter, and then also sell a covered call and make an extra 1%. So I'm up 16% on a stock that I'm bottom picking.
maybe.
I don't believe you.
Maybe. Now, not a recommendation to buy or sell KHC. Offer not valid in all states. Exceptions are applied.
That
was my worst disclaimer. My worst disclaimer ever. Past performance doesn't equal future performance. Trading and investing has risk. Well, it does have risk, but if you understand, like, for example, okay, you could own that asset. You could also sell the covered calls. And if you did see a downward movement or you saw it starting to give up ground, you can buy protected puts on it. You can cover your asset using the options. And if you go through like the Tackle 25 system, this is not one that'd be on that list. I wouldn't even call this like a dirty, sexy money. I just call this like a dividend fireworks type.
That could be more of a dividend fireworks. I do agree with that. Kraft Heinz dividend fireworks down here. And actually, the even though it's been chopping sideways, to me, it's looking more reversal characteristics. We got 1, 2, 3.
Well, and I think more importantly here
lows
is that Dennis says, I love me some Heinz ketchup. You know what I don't like, Dennis? Fancy ketchup. Whenever anybody has like a fancy ketchup bottle, you know that's some sort of off-brand crap. It's not the real stuff. It's not the Heinz.
Okay. I was about to say, okay, I get what you mean now. But when I first heard that, I immediately thought Whataburger fancy ketchup.
Oh, well, you've got a different perspective there.
Okay, yeah, because they actually have their two. They call one fancy ketchup and one spicy ketchup. And by the way, I'm spicy all the way.
What makes it fancy?
Marketing.
I have no idea what makes it fancy, but you know what? It's awesome and it's fantastic. It's fancy.
Yeah. So, brand preference is for sure there. And then none of that white box mac and cheese crap that my mom used to try to feed me. Nope. Had to be the Kraft. That's the good stuff, right? So
it does need to be the Kraft. That actually, mac and cheese, that's one of those ones that's like you can't buy like the off-brand, like Great Value or whatever. Like it does need to be.
It doesn't taste the same.
Oh, and then I thought I'd do my kids a favor and try to feed them some of the organic stuff, like the fancy mac and cheese you can buy at like Whole Foods, and you might as well take the cardboard box and boil it up along with it. Just does not taste the same. So,
we've tried those recipes where you actually like make the noodles and put like fresh grated cheese in there with like some cream and try to make it cheesy. We always seem to ruin it.
Yeah, it's not.
Give me the powdered stuff. I know it's processed. It's just easier. I throw a stick of butter with some milk, mix it up, and it's perfect.
There you go, every time. But again, the other thing I like about it is it did get back up above all of its moving averages. So you do have, I think, a solid buy signal there, if that's what you're looking for. Otherwise, I think it's one of those kind of value investing dividend type candidates that over time, if it dips in price, this is when you'd possibly cost average. Now, I'm not normally a huge proponent of cost averaging just because I do come from more of a trader perspective. But if you take, again, that Warren Buffett approach, and, I've recently been rereading Intelligent Investor by Benjamin Graham, and that it's just kind of puts you in that same mindset.
That does put you in a long-term mindset.
What to do with your longer term money, good strategy for the IRA account, for the Roth account. The type of thing you'd want to hold in the long term.
So on my bookshelf, I keep my 3 favorite investing books.
Here we go. I love this.
So we got our long term, our Intelligent Investor, Benjamin Graham. We got our short term, Reminiscence of a Stock Operator, Jesse Livermore. And then, of course, you got to understand how the Fed messes with your money, what the Fed's about. The Creature from Jekyll Island, learn
Great book.
how the Fed started. So those are my books that actually make it to the behind me bookshelf. There's a huge bookshelf on the other side of this desk that's got 50 more.
There you go. So not a bad move there. Now, we've taken a look at our gold, our precious metals, our oil. I don't really know if we need to go look at any other commodity based, anything like that. Where did Cody go? I wanted him to come back and read mailbag questions. He's
Cody.
gone now.
Oh, Cody.
Sorry about that. My wife called me over and handed me a note it's not the greatest one. It pretty much says the fridge and freezer are not working. Please call someone today.
Okay. I thought it would be like a nice note, like, do you like me?
Yeah, do you like me? Yes.
I know we were
no.
talking about that
Maybe.
before. I did get
Maybe.
a kiss though, so maybe we're already past that stage.
All right.
I would hope my pregnant wife likes me.
Good deal. Did you have any of the mailbag questions there?
Oh, okay. Mailbag questions. Yes. Another one, which was one that we definitely wanted to cover because I think it's a good topic that a lot of our students need to understand. Just what are some tips that you have to overcome fear in trading? So, David, I'm actually going to start with you. You're